Hello traders, welcome back to the channel. Today is another Q&A. I've done these quite a lot on my channel because you guys seem to love to ask questions. I do Q&As usually every month on the channel. Obviously I've missed a few, but we're back with another one. So I ask for questions on my Instagram, which you guys should go and follow. Make sure you follow the right account because there are a lot of accounts trying to impersonate me, trying to get your money, sign up for scams. So just be careful if an account follows you that's pretending to be me. So first question, how to deal with losing streaks on a funded account? I'm down -8%. If you're actually on the funded account stage, firstly, a lot of people can't actually get to that funded stage. You know, if you look at the statistics, obviously every prop firm is different, but it's a very, very small percentage of people that can actually get to that funded stage. So you then have to look at your risk. If you pass a 10% phase and then a 5% phase, for example, you know you can make profit for, a decent amount of time without breaking the rules of the drawdown. So what's changed when you've actually gone onto this funded account? Maybe you're risking 1%, 2% instead of maybe 0.25 or 0.5% risk on your account. When you actually first get funded, I always recommend risking a tiny amount and just getting into profit. So many people get a funded account, they try and aim for 20%, 30% profit, trying to get on top of the leaderboards, and it just ends in disaster. What you want to do is risk 0.25%, 0.5%, make 0.5% profit or even 1% profit, and then just stop trading until you get your payout. The main reason for this is you haven't got your refund yet, because when you get the payout, you get your refund from the challenge fee. Until you get that, do not risk a lot on a single trade. This person asking the question is down 8%, so they can't have been risking 0.25% because they would have had to lose 32 trades in a row with no winners. Or if they're risking 0.5%, they would have had to lose 16 trades in a row with no winning trades. That's obviously not the case. If you are actually in drawdown on a funded account and you only have 2% less, obviously you can't continue risking 1.5%, 2% on each trade. You're going to have to risk 0.5% on a single trade, and hopefully you don't lose 4 in a row. But being in drawdown is actually very, very tricky, especially if it's on a funded account, because you don't actually have any money that's in the account. Let's say it's £100,000 on a personal account and it goes down to 99, you still own that £99,000, so you can just take out the 99,000. Whereas if you're on a funded account, you don't have access to any of this. You only have access to the money that's over that 100,000, and then you only get 80% of that anyway. If you're in drawdown, you obviously have to lower your risk if you're that much in drawdown. I always say to people, if they're like 2-3% in drawdown on a funded account and then they start risking 0.25% or 0.5% when they've previously been risking 1%, don't do this, because you're going to need to make double or even 4 times the amount of profit to get back into break even or back into profit than you would if you were just keeping the same risk and the same risk to reward on your single setups. And that is just the best in my opinion. So if you're on a losing streak, maintain exactly the same strategy which you were profitable in the first place, because you know it works, and always refer back to your journal. This is where you're going to learn a lot about your trading. Maybe you're going to find out the reason why you're actually in a losing streak at that particular time. So definitely review your trades and see if there's anything you've done differently to what you normally would do. Number 2, it's not really a question, but they ask for tips to grow a personal trading account. I'd say this is quite tricky. It's a lot trickier than trading a prop firm account. A prop firm account, you pass the 2 phases, you get an account, you make a bit of profit, you get a split, it resets, you make profit, it resets, and so on. Personal account, if you make 5%, you're then up 5% on that account. Then what do? Do you up your risk to accommodate for that 5% extra? How do you do it? So tips to grow it, you want to leverage prop firm accounts to grow your personal account, or even leverage other businesses to actually fund your personal account. Let's say you put 5k or 10k into a trading account, a personal account, and you want to grow this. The best way to grow it is obviously using compounding. So you're going to want to either let's say you make 10%, for example, it goes up to £11,000 in the account. If you then risk 1% of 11,000 instead of 1%, 10,000, you're going to make more profit. This is obviously common knowledge, but you obviously see people that put their trading account and their results into these compound interest calculators, and it tells them that they're going to be a billionaire in 3 years or something. But this is obviously very unrealistic, because you're not going to get the same results every single month for the next 3 years. But if you can use your prop firm profits, so the profit splits which you actually get from your prop firms, you pay tax, and then you put them into your personal account, you're consistently depositing, then you can slowly up your lot size with the account size growing. Then obviously as a result of this, your profits will slowly rise as well. Obviously the losses are going to rise too, but profit increase is what you're really interested in. Because if you're a profitable trader and you're making money on a prop firm, let's say you even just use a trade copier, so any money you're making on that prop firm, you're making money on your personal account, so they're both going up side by side. But then the profits you're using from the prop firm then being deposited into the personal account, that's growing a lot more than the prop firm profits will, and eventually you'll obviously have an account, personal account, which is bigger than the prop firm account. So you only really have to trade one account, and you don't need the prop firm to make a decent living, but it just helps grow the account consistently if you are profitable. Obviously if you're not fully profitable yet and you still want to kind of trade a personal account, do not put a lot of money in this account. Put maybe £250, £500, up to £1,000 in the account, depending on your lifestyle at the time. You don't want to be risking loads. You're going to want to put in money which you can afford to lose. Let's say you have 50k savings, you don't want to put all 50k allocate into the account. You still want to start with around £1,000. Reason for this is you're most likely going to lose it at the start. When you start making, more consistent profit, and you can slowly introduce it, maybe start trading £5,000. If you're doing well on that for a few months, maybe put £10,000 in the account and slowly build it up. And obviously as this is growing, you're making more profits and the account is growing naturally. You never want to put everything you have into a trading account. The broker could close down, and if you're not using a regulated broker, your money's gone. Obviously if you're using a regulated one, you're protected up to a certain amount, depending on which regulation you're actually with. But definitely compound the account by using other businesses or prop firms to grow the account and deposit into the account. If you're looking to grow an account, you don't want to ever really withdraw from it. I know there's going to be circumstances where people have to take money out. Maybe they need to spend money on repairing a car or a new phone or certain bills or anything that come up. Ideally, you're going to just want to deposit, grow, and not really withdraw as much as you normally would from like a prop firm account. Next question, what did you do with your first payout? I don't know if you're talking about prop firm payout or just like withdrawal from trading account, but my first withdrawal from a trading account was £1,000, and this was actually in my first week of trading. So I had a £700 account. It went down to £450 because I obviously didn't know what I was doing, and then I flipped it to £2,000. I've made a video on this whole process on my channel a couple of years ago, and then with that £2,000 I withdrew £1,000, so technically I was £300 profit even if I blew the rest. But with this original £1,000, I actually just bought a new phone. Now at the time I didn't really have a good phone, and I was like, I'm trading all the time on my phone, I'm doing stuff on my phone, let me just buy a new one. I think it was like an iPhone X or something at the time, and yeah, it helped me trade, and that's where I started trading full time properly on that phone. Then obviously we've upgraded, and now we have the newest phones out there, and multiple newest phones out there. We have quite a few. I actually have 3 now. But yeah, first thing I ever bought was a new phone. If looking back, I shouldn't have done that because I just blew it the next week, the remaining account balance. But it was a good investment. I say if you have like a new laptop, a new setup, new phones and stuff, it makes you want to actually sit at the charts and learn. It makes you want to be on your phone and practice trading. Obviously, I'm not saying go out and buy materialistic items, but sometimes people don't actually realize their profits. So it's all good me making hundreds of thousands of pounds. It's always just numbers on a screen. If you're not buying like watches, setups, holidays, experiences are always the best thing to spend your money on, or even just more investments. If it's physical assets, you obviously realize it more. Like if you buy like blocks of gold or watches or anything like that, then you kind of realize the profits more. And the same with like experiences, holidays and everything. But let's say you're just buying like a Gucci jumper or some Gucci shoes, anything like that. You'll be excited at the start. You're like, oh, I'm wearing Gucci and everything. But then do you really care about Gucci? Would you really want to spend £1,000 on a coat just for the brand? Probably not. So, I always try to spend money on things which will help me in my business, or it's just a good experience which I've always wanted to do. That sort of thing is always the best in my opinion. Next question, I always exit before the traders hit the take profit due to fear. What should I do? I used to do this too. So let's say my trade was running 4% in profit, my TP was at 5%. I'd be really scared to hold to the 5% in case the trade runs from 4% back to my stop loss or back to break even, and so I just close out early. That was my thing. Just in case it goes back, I've still secured profit. Overall, this is the worst thing you can do, and I'm going to tell you why. Let's say in your back testing, you're holding your trades obviously to the take profit or stop loss every single time. A lot of people just press play, they run their trade, stop loss hit or take profit, then they put it in their note. When you're actually taking that strategy into the live markets, you obviously know how it's performed back testing for 6 months, 12 months of results. Whereas if you're taking it live and then you're suddenly entering trades and not holding to the stop loss or not holding to the take profit, the results are going to be so different. And people say, why are my back tested results different to my live results? If you're not recognizing that you're closing early due to fear, or you're just closing just for the sake of it, just to avoid a loss, then your results are just going to be completely different. You might have a higher win rate, but the profit is going to be a lot lower in the long run. So you're going to want to trade exactly the same as your plan, exactly the same as the strategy which you've tested before you took it live, because you're only taking a strategy live because you know exactly what you were doing in your testing was profitable. So if you're actually closing early due to fear, you need to look back at your strategy, look back at your journal and realize I wasn't scared doing my back testing and these were the results. So why am I scared live trading? Obviously you're seeing the profits, you're seeing the numbers and everything, but you just need to stick to the plan. What helped me was just setting alerts. I set an alert near my entry. I'd enter the trade, I set the stop loss, I set the take profit, and what I'd do is I just set an alert at the stop loss or an alert at the take profit. Let's say there's an area in between the entry and the take profit where you could see some resistance, or you could see if price reacts at a certain level, then I want to get out the trade. Obviously set an alert there too. And if there's no areas which could potentially react to and the trade could reverse, set an alert at the stop loss, set an alert at the take profit and just let it run. I do exactly the same. I'll enter a trade and I'll simply close my phone or do something else. Go play a sport. You could go watch a YouTube video or something while the trade is actually playing out, just to stop you seeing what's happening with the price action. The same as your back testing. You just press play and it runs. Do the same in your real trading, and it will make it a lot easier to hold the trades, during a longer period of time. Next question, are you going to do any podcasts soon? So trading industry has a lot of podcasts coming out recently. I actually did a few of these on my channel. I got a few guests on, but they obviously did quite well and you guys loved them, which is quite nice. But the main reason I don't do them anymore, and the main reason I will never go on another person's podcast unless they're like really good friends with me, is because I would rather people that want to watch me watch it on my channel. Obviously it sounds quite selfish, and I know people go on podcasts to share their points and everything like that, but it's like, why don't you just do that on your own channel? Why don't you just say the points which you say in a podcast on your own channel? It just makes sense to me. But the reason I won't go on any other podcast is because the trading industry is very, very toxic. You guys have probably seen it on social media and everything. People love to comment on other people's trading. So why would I go on a podcast with someone? Firstly, you never know who's legit. So unless you're really good friends with someone or they've shown transparency, I would never be associated with someone like that or do a video with someone like that. That's kind of the main reason. So you're better off just staying in your own lane, putting in the time in your own trading and on your own social media, rather than just trying to get views from other people and everything like that. That's just my personal opinion on it. Obviously people can do whatever they want. People have different thoughts about it. But yeah, no podcast coming anytime soon. Let's just say that. So the last question, how do you manage several funded accounts? There's different ways to do this. Obviously you can have multiple phones or multiple accounts open on MT4 and just trade different accounts, but you're going to want to trade certain accounts differently to others. If you have the same risk on every single account, the same trades on every single account, then if you lose or you go to a losing streak, every single account is down. You don't want to link everything at the same time. Let's say I have $1 million in funding. I don't want to have every single trade I take on one account taken on every single account with that 1 million. I want to split it up. So I want to have maybe a low risk account, a higher risk account, and obviously link accounts to these certain rules and criteria on your trade copier. The best thing is with a copier, you can choose the risk multiplier and all the rules for each individual account. So you can copy 2 times risk on one account, 0.5% risk on another account with the same trades. So you can kind of make it high risk or low risk. But with funded accounts, if you're managing them, but if you're managing funded accounts, your aim is to just get payouts and just be consistent. You're not wanting to try and double the account every single time. So if you're having one account and you make 1% profit, then you have 5 accounts linked with them making 5% profit. If you're linking multiple accounts, trading several accounts, then you want to aim for low risk, low profits. Just do that consistently and then it will all add up because you have multiple accounts trading those same trades. I did actually do a whole video on a trade copier and how I use it and trade it with several accounts, so go check that out on the channel, and I'll see you guys next time.